Zip. Zipco is our stock of the day today. Now, shares are rebounding slightly from yesterday's sell-off. Its quarterly report, I suppose, disappointed investor, despite a bumper 104% rise in revenue. COO Peter Gray yesterday telling Ausbiz that he's pretty pleased with the results and he's all about the US.
Particularly pleasing was the continued execution and acceleration in the key market of the US. So our US numbers have increased over 200% year on year, which is a great outcome. Not only have we increased, but we've also maintained market-leading margins in the face of spirited competition. We believe we can become the most trusted, fair and responsible payments brand in the world.
So that is Peter Gray, COO of Zipco. They're talking to us yesterday. Rudi, I would like to start with you, I think, with Zip. The brokers are a bit divided on this one, but most have had an opinion and weighed in on that quarterly report. So, sum it up for us and give us your view.
I think to sum it up really succinctly, I think the expectations were higher. At face value, those numbers, of course, look fantastic, but that's not always the point. The point is what is priced in and what are analysts expecting, because that is basically what moves the share price here. So those numbers look great, but expectations were higher. So what we've seen since the result is that expectations have been lowered. But having said so, there's a fair argument to be made that this share price is not priced to the max. And that's why probably explains why today the share price is not falling any further, but it's now being seen as representing more value after the sell-off we had yesterday. And that's the short story, I think.
Yeah, all right. And do you like Zip as an investment prospect now, knowing that there's competition increasing in the space, knowing that they bought the QuadPay business because it was such a strong brand, but of course now they're rebranding it, going with a global brand?
Yes, exactly. I think point number one to be made, I think should be made, is that the easy gains are now made for this sector. But point two is equally important. Growth is not necessarily at an end here for that sector. So this is definitely an innovation that's going global. But needless to say, there's just too many people trying to have a piece of the pie. So what we will see is a consolidation happening one way or another. So some business will go out of business, other ones will be bought. I have to say this, that the share price recently moved up because there was speculation that Zip themselves might become a target, and that is not inconceivable. My view when investing in this type of segments of the market, it's usually quite simple. You go for the market leaders, and whether we like them or not, but Afterpay is the market leader. But I have to say, Zip is definitely a very, very good second. But it remains to be seen whether that's enough to survive in this market over time. So I have to say that if someone puts a gun against my head and says you have to buy one stocks in the sector right now, I would probably opt for Afterpay. A second choice would be Zip. I would not even look at the 1,012 others that are now springing up worldwide, because I don't believe they have a sustainable business model longer term.
Good. Well, that's not a ringing endorsement of Zip, so that is not a buy coming from you, Rudi. Claude, what about you? Because again, we're seeing a little bit of a bounce after yesterday's sell-off in Zip. Does it offer good value at this stage of the game? With Citi, for example, says that, there could be some corporate interest in the business, or at least there is that speculation out there.
I guess it depends what you mean by value there. In the sort of traditional sense of trying to buy a stock at below, the value of the actual business, I don't think any of the buy now, pay later do offer good value. I think these are stocks they're the equivalent of, any kind of industry that's been in a bubble in the past. Like I remember in 2013, it was 3D printing, and there's like clicking websites like basic internet websites, pets.com back in the day. It's just, the whole thing is just a massive, you cannot deny that the sentiment around this industry is massively optimistic. And, Zip, even excluding the loss that had to do with the acquisition of QuadPay, which I'll just ignore, they made a loss of like 150 million in the last half. And none of these businesses are mature enough for people, in my view, to with any confidence be able to forecast the profit going forward. Now, I'm not hesitant to buy stocks that aren't yet making a profit, but I just don't know how people are modeling the profit. That there's like brokers are competing with themselves for more and more heroic assumptions, because these businesses are capital intensive and constantly need to raise more money, which means that the brokers can make money by being part of those raisings. So, I wouldn't bother valuing any of these companies. I think if you're trying to make money with them, then you just want to trade on the sentiment, trade on the hype machine and the excitement. And if that's what you're doing, then clearly Afterpay is probably the safest option, because it's always going to have the most hype around it, being the leader. Now, I don't do any of that, but that would be my approach to it if I was going to try and buy shares in it. And for that reason, I completely agree with Rudi's ranking of them. It would be the best one would be Afterpay, and probably the next best one would be Zip. Just in terms of actual value compared to the other ones, probably Zip is the best value, but I'm just not sure value actually is what is dictating the prices here.
Okay, got it. So this is not a buy for you.
No, it's not a sell either. It's just I'm sorry to say that this is just the sector that I'm not equipped to play in very well, and I don't have an advantage over other people in it at all.
Yeah, well, that's good advice, really coming through for our viewers. And also just a reminder that this is information only. It's not financial advice. If you do decide to, take an interest in any of the companies that we do discuss, not talking to you guys on screen, but for our viewers, you do need to take your own circumstances into consideration and get advice.